Okay, folks, welcome back. This is our midweek review for the ICT mentorship for April 15th, 2020. All right, here's our daily chart of the dollar index, Dixie, on TradingView. This is our balanced price range. Okay, so I won't go over that again. You can go back and listen to the previous recordings, but I said we would likely see a draw lower and target this area here, but the near term sell side liquidity pool resting below this swing low would be the next discount array. Mentioned also that we would possibly see the market want to run up into this bullish candle, which is a bearish order block that's inside of the balanced price range, and it also has the closure of this small little fair value gap in here. Okay, the market rallied up into that and has shown a willingness to not want to hold on to those price levels as of yet. So we'll see if it wants to roll over tomorrow. We have the unemployment numbers for the US. I expect those numbers to be bad, and subsequently we should see the dollar index trade softer as a result of that, targeting this sell side liquidity pool. This in here just feels like the pumping up of the dollar before the economic news tomorrow hits, and then we see what would be reasonable to expect weakness on the part of our employment numbers. So let's go into an hourly chart. You can see how price comes up into that. The red line is that bearish order block, as I mentioned in Monday's recording. There's our bearish order block, these two candles specifically. Okay, and then we have the fair value gap that resides in here in the form of a SIBI, sell side imbalance, buy side inefficiency. Trades up a little bit into the order block, notice that, and moved lower and traded inside a little bit of this buy side imbalance, sell side inefficiency. So I like how they left a relatively smooth bottom of price action in here. I like that. So 98.80 has suspect, support in my mind. So there's a lot of sell stops that are building up there. Anyone that wants to buy this currency, in other words, if we run up, it could rebalance to this price point here. It would be the bottom of that old balanced price range on the daily chart, and not try to trade back to that red line, which is the order block on the daily chart, the bearish order block. It would be better if it doesn't get even to the midpoint of the range between this low and this high. So we don't even want to see it trade here, like 99.75. It's better if it doesn't even go there. I'd like to see it get to at least this candle's high here at 99.65. So 99.65, 99.66. That would give our institutional and order flow entry drill, and then maybe expect it to trade lower on the heels of the unemployment numbers tomorrow. Moving into the 15-minute time frame, you can see that would run, I guess this short-term high here comes in at 63, so it could bump that and then look for it to run lower. That's what I would expect. Okay, so I'm not terribly excited. I'm not trying to sell the idea that it's going to happen. That's what I'm personally expecting to see happen tomorrow, and then moving below here. Now, if we trade back above the red line here, which is the bearish order block, I don't know what we'll do the remainder of the week. So it would push me to the sidelines, in opinion. Right now, my opinion is we have done one of the things we were looking for in terms of trading to, and it showed a willingness to do that. So I'd like to see it trade down and attack the sell side liquidity here, and then move into the lower level objectives I was outlined on Monday's video for the dollar. So I'm still, gun to my head, I'm still bearish dollar. Nothing's really changed there. So let's go over to euro dollar. Okay, so here's euro. Nice big down candle here is formed, and we're stuck right in the middle of the range between this high and this low. So Does it have the willingness to go higher? I don't see it here. Like I said, I haven't been a fan of euro, and I made that very clear. I think the focus really is still on cable. Okay, so I'm not going to have any kind of sweet tooth for euro here. So we're just going to drop right into the hourly chart. You can see nothing's really standing out on this time frame. We have a little bit of a imbalance in here that I don't really particularly like. And the reason why I say that is because we had relative equal highs here. We've already right above that. We've broken market structure here on a significant level. And then we have remaining sell side liquidity here. So euro could still drift lower and run this out and still do that in the capacity that would allow still the dollar and cable to do what we've outlined. So euro can act a little weird in here. And again, it's all in alignment with what I said before in Monday's recording. I'm just simply not excited about participating in this currency. So again, nothing terribly noteworthy here, and just this doesn't look good at all. I don't like any of this. Okay, so we had the bearish order block in here, which is these 4 candles. We traded up into it here and broke them here, and then we went even higher, clearing up some of this smooth price action in here. And then all this, I don't like all that. Okay, it just doesn't give me a lot of context. So if we see a major sell-off on the dollar tomorrow, euro could find wings and clear up its buy-side liquidity pool resting here. I'm just not really interested in trading, again, this particular currency pair. Okay, so there's nothing here for me to really talk about that would bolster any more confidence from a narrative standpoint. So I'm going to keep it very light in regards to that. And I'm going to get to the currency I want to talk about. So here's cable. All right, so we had our initial objective, which was trading up into the fair value gap, which is right there. And look, really pay attention to this, folks. Let me get this off because we don't need that anymore. And I'm going to take this off. We don't need that either. So that way our chart is very clean. Okay. All right, so top of this candle, it's high. That's what we want to see it trade up into as an objective, because we were bullish. Remember, we were looking for higher prices, clear up some of this buy side liquidity, and then reaching back up into this breaker. But I outlined the very specific price level I wanted, which was a consequent encroachment of this candle's tail, and that's been extended out. Okay, so let's extend that a little bit further, so that way everything will be in place should price trade up there. All right, so that's the business there. So look very closely here. This candle's high comes in at 126.24 and 8 pipettes. Look at the bodies here. Look how nice that is. Okay, price comes up, it hits there, and then closes right there. Okay, so it gives you the opportunity to find that as an objective that I outlined yesterday, and when we were talking about cable anyway, before I took a break, I said that this would be the relative leader for upside in terms of all the foreign currencies relative to euro and cable. Okay, so I don't want to try to talk too far ahead of myself in regards to relative strength, but in terms of the two pairs I predominantly follow for weekly commentary, upside leadership was to be seen in this currency pair. All right, so we have seen that, and the buys of the candles in here have respected this area right there. And I want to see if we get that sell-off in dollar tomorrow and then continuing higher on cable, because it just doesn't look like it needs to stop here, even though it would be enough in terms of an objective. Okay, so in your notes, we were bullish cable. Cable's been rallying. It went up several hundred pips, and it traded to a logical price level, an old high. Okay, so when this line is on our charts, we'll see the effects of it on a lower time frame. We're going to drop down to an hourly chart, but I still believe that this is still in the cards. It may not get there this week. Okay, so don't expect or hold me to that I'm expecting this to happen this very week. It could, but I'm not insisting that it does. Okay, so again, we'll see probably a weaker number on the employment number for tomorrow for dollar. That should give wind in the sails for up movement on British pound. Moving into the hourly chart, and I just hit the 2 hour chart. The hourly chart, and look at the price action at that level. I mean, yes, we slam above it, and then it just hangs around. It allows price to remain there. So the algorithm stays at a price level, allowing short holders to get in, and then breaks. We have a break in market structure. Now we're trading back up into an imbalance here. So I really want to see it make an attempt to get down into that 2360, 2370. What is this low here? The low comes in at 61. So yeah, 2360. Very nice, clean little level here. So you know what's resting below that sell side liquidity. And look how nice this is. Okay, that's what I'm looking for. Now when I scrub back here further, yes, you can look at this low here, and look, we went below that with this run here. But when I'm looking at price, this is something else that I'm answering a question as I'm going forward with the commentary. When I'm looking at price, just like I outlined this area here, very clean. This area in here is very clean. I try to scrub backwards from wherever the live hard red edge is, okay? And I want to see where all the clean lows are. Like we have relative clean lows here, and we traded down into it there. Okay, so we get that run, it pops up, rebalances. So I want to see if it has the ability to run lower, keeping this intact. I would like to see that remain there. If it does run above that, it needs to reject that aggressively. Like it needs to go up there, run it, and then really just create a sharp reversal. Otherwise, it's not good. And it takes us right back to what I said regarding the dollar earlier, is that if we rally on dollar, then again, I have to move to the sidelines with my opinions because it doesn't make any sense for it to be doing so. But getting back to what I was saying, you want to start right at the hard right edge of wherever price is at the time you sit down in front of your charts. And then from that point on, you want to start looking backwards. Okay, so during all of your look back, you want to see areas that are very clean. Note those, okay? And you want to find the lowest low, and you see we hit it, went below a little bit and rallied. Same thing here. Relative lows, they're equal. I'm going to use the lowest one. So that's our next objective. So right at that level, we got 123.61 and 4 pipettes. If it's reaching down to find discount or sell side liquidity, it's going to go below that low, and the nearest round number below that is 123.60. So that's how I calibrate and pull out these specific numbers. And then scrubbing back a little bit more, and you can see that again pops off right at the chart like that. Now it's totally different if you start looking from left to right. Then it won't look so obvious that way. Okay, so again, we start at the hard right edge, and you work backwards slowly. And whenever you see levels that just make it very obvious, like those right there, are obvious relative equal lows. So you find the lower of the two, drop your chart on there. What's it say? 122.88 and 4 pipettes. So the next 5 or 0 level would be what? And again, we're reaching down, so we want to allow for a reaching for a lower level than just simply this low, because the liquidity that would be resting at that low would be just below it predominantly. Okay, so in this case, it would be 122.85 would be our level, or 122.80 institutional. Okay, so that's how I more or less frame out my levels, what I'm looking for targets or just points of reference in my analysis. I may not particularly be in a trade, like for instance right now I'm not actively trading. So, but if I'm doing my analysis, if I'm looking at it, if I'm paper trading it, if I'm just following it because of the context that I outline in our weekly reviews, this is what I'm doing. I may not actually do this, and truth be told, I really don't do this a lot in the videos, but when I say specific levels, this is what I'm doing and how I'm looking for clean levels, for lows, and the same thing is said for if we're looking backwards from the hard right edge, scrolling back slowly. You don't want to rush around. Like, you don't want to be doing all this business here. Okay, you want to give yourself time to spot these very clean levels. And as you go back slowly, just a few candles at a time, if it's relative equal lows, it'll jump off of the chart. It won't be like, is this really relative equal lows? Like, you can look at that right there. This candle's low and this candle's low here. Right there, you have a range that's too clean. And then you've had a rally since then. So your mind or your eye should be trained to go right to that price point right below here. And then your mind kicks in with, why is it important for your eye to jump to that place in the chart? Because there's liquidity resting below that. What liquidity is it? It's sell side liquidity. Why is it sell side liquidity? Because those that are long, they have their stop loss below that, and they don't want to trail up too tightly and get stopped out. So there's a large pocket of liquidity resting below these equal lows. Now, that does not always translate or equate to, okay, therefore the market's going to absolutely go there. That doesn't mean that at all. It just means that that is a logical, very logical location for price to drop down into should it be bearish for British pound versus the US dollar. The catalyst for that, and I'm expecting to see come to fruition, is that unemployment number tomorrow on our economic calendar. Okay? So just a little bit of school of thought in regards to that, and answering a few emails, and dropping into a 15-minute time frame. Okay, so you can see we come back up in here, closed a little bit of this up, and the body's actually pushed up into this fair value gap. Notice that, yes, we have a wick, okay, but look at the bulk of the volume in the form of the bodies of the candles. Okay, so the bodies of the candles, not so much the wicks, the bodies, draw that back into here, and you can see we traded back into the fair value gap. The wick goes in through, but this whole area right in here, this is a balanced price range. Okay, we had the opening of this candle, trades down, it closes, opens here, rallies back up. So basically all this candle's body got traded back again the very next candle immediately. Okay, when we see that, that becomes a balanced price range. The balanced price range, again, as I said, this is my concept. If you see that, wherever that range is, you want to define the midpoint of that. And price will have very hard, well, it should have a really hard time trading back to the midpoint of that. Right there's midpoint. And it didn't even get there. Okay, if it can touch that, but still be bearish. Okay, so that's the premise behind a balanced price range. The balanced price range is not specific to any one time frame. Okay, I mentioned in recent discussion, especially on Monday, the outline of what made that dollar balanced price range on its daily chart, and then finding another example of it in reverse when it was bullish for another currency. The premise was still the same, but notice that it's not specific to any one time frame. So in other words, when I say certain things, if you see me commenting about a concept, unless I say specifically this is only typically seen on this time frame or that time frame, and there's very little of that, if not all, minute amount, where things are very specific on a time frame. Okay, and those time frames are generally like a 5-minute or a 15-minute time frame, because I like that my 15 minutes like my bellwether time frame. Like, I can do anything I want on a 15-minute time frame. I can enter long-term position trades, short-term trades, scalp, whatever I want to do, I can trade with a 15-minute time frame. It gives me everything I need. But the things that I rely on for a 15 or 5-minute chart, for instance, like the standard deviations you learn about with the FLOUT, central bank dealers range, and the Asian range, those are really limited to those time frames, and they don't really have an application, okay, not in the sense that I'm using for the mentorship, any other time frame. So we use those specific time frames, 5 and 15, as it relates to using standard deviations for intraday measurements. So apart from those two time frames, there really isn't a whole lot of things that you're going to hear me say that isn't applicable on all time frames. So again, balanced price range is the same as an order block. It can happen on any time frame. All right, so I want to see price find some support in this area here on this order block if we trade any lower tonight. This down close candle is our order block. Extend that out in time. Let's see what the open is on that candle. Open is at 124.98. So we're just going to basically call 125 big figure. So it could trade down to 125, run the low here, okay, and if it sharply reverses at that level, and again, I want to see this low remain intact. I don't want to see it give up this low. Then it should have no problem getting above these highs here if we have that bearish employment number on the dollar tomorrow. This is the only currency pair I'm actually watching or being of any interest right now for the remainder of the week, and we'll see what it gives in regards to the things I'm expecting. The last market I want to take a look at is the gold market. All right, and there we are. So gold's been able to find its footing. I said if we had 1650, if it supports that, it's going to have a real easy time getting to new highs and running these relative equal highs here. We've seen that. Tomorrow's unemployment number is going to be the next deciding point or decision point for gold. So far, it looks like it simply wants to run higher. If we get back down below this rejection block, which is the highest up close, and that is 1680. Okay, if it trades back below 1680, then this was just a run above here, and we may go into consolidation, if not altogether, make a run to rebalance to this area here, or at least come back down for sell-side liquidity here. And that would be, in my opinion, problematic for the bullish structure for gold, at least for the very near term. Gold, I still believe, can hit 3,000 if all these things stay in play. Okay, what I mean by that, the lockdown, the continued inability for companies outside of Amazon. Everybody's buying things from Amazon. They're getting toilet paper from Amazon. They're getting, well, they can't get food as much as they were in the earlier weeks, but I've probably spent about $3,000, $4,000, in the last month and a half from Amazon. Okay, the packages come here to the house, and I spray it down with bleach water, and then I leave it out in the sun for an hour or so, wait for the cardboard to dry up, and then I bring it into a garage, and then it sits there for 5 days, and I don't touch it, and then I unpack it. So I have an Oculus Quest that I had delivered. My son's been driving me nuts for one, and I was like, okay, I got to get him occupied. So it's sitting out in the garage. I got it through Amazon. So everybody around the world is buying the things that they're buying from Amazon, and Amazon stock has gone parabolic. It's almost went up like $700 or so in just the last few trading sessions. Most other stocks aren't doing anything. Okay, so that's the only outlier I think that exists for the stock market right now. There's nothing that I would personally believe is of any real value for buying, and Amazon's just going to make money, unless they say, Amazon packages are carrying the virus, something like that. Then people are going to slow down what they're spending, but they'll still come back to it later on. But nonetheless, gold. I think that if we see the weaker reaction in the unemployment number tomorrow, that will bolster some bullishness for gold. I have a near-term target of 2,000, and how we trade at 2,000, okay? How we trade at 2,000 sets the stage for whether we get to 3,000 this year. And 3,000 is my goal for gold if we stay in this situation that we're in. Now, there's a lot of discussion about are we going to open up the economy? And Trump's making all of these teams, these task forces with people that aren't qualified. Okay, I don't know what's going on. It just feels like the administration is looking for any way to pacify the American populace. And it's just one more pacification, and then they kick the deadline of when they're going to open up the economy further down the road. Right now, all eyes are on the last day of this month, first day of May. Maybe they'll do selective openings. Okay, maybe they'll do that. I don't know. But I know that the longer they keep these things in play, the more uncertainty builds animosity and anger, pent-up hostility. And a few states today had people come out in their vehicles and block up all of the roadways and made a scene. That's the wrong way to do it. Okay, that's the wrong way to do it, because if that starts becoming an issue, all they're going to do is say, okay, you cannot drive anywhere. You can't do it. And it's just going to create more of the very things that people are growing impatient with. And maybe that's what they're ultimately trying to get us to do. I don't know. But I know that civil unrest is the likely next stage. And if that happens, it will become infectious. Okay, and people will start doing more of it, thinking that it's going to make the government do what they want. I don't know what they're waiting for in terms of doing certain openings. Like my wife and I were talking, and there are some states that have a very, very low reporting of infections or case studies of this stuff, COVID. And should they be in house arrest? I don't personally think they should, but I'm not a doctor either. It's just my opinion. I think that there are certain states that shouldn't be doing it at all. New York is one of them. And if they have as many cases as they reportedly have, they shouldn't even be discussing it. They shouldn't even be having the discussion about whether they're going to open their economy up or not. And I think it's reasonable. I wouldn't want to be there going through it, but it would be, if, we're going to be honest, it's reasonable not to, expect that type of environment open up. And unfortunately, it's a hot spot. Whether or not there's enough cases, there's a lot of things I've been reading, and there's documentation saying that the medical teams and physicians are being told, if they suspect or if they don't even know why they really passed away, if they think it may have been COVID related, that's what goes on the death certificate. So those numbers are, admittedly, I know those numbers are inflated. Okay, every one of those people didn't die in New York of COVID, because if you look at the data, and you can do this on your own, surprisingly, all of the heart attack death, all of the cancer deaths, natural causes of death, just people expiring for other reasons, everything's lumped into COVID right now. And all of the other deaths and means of reporting, they all have gone down. So apparently COVID's the cure to cancer, to natural death. I'm being facetious now, obviously, but the point what I'm making is, why are they pushing this number so high? I don't know, except for something that isn't good. If we don't open the economy up, okay, if they don't put everything back to the way it was in the lower impacted areas in our country, the 1st of May, then I'm growing more concerned about what's actually going on. And I'll have more to discuss at that time. Right now, I don't want to speak too soon, because ultimately whatever I say isn't going to impact or change anything, because it's just my conjectures about what may be going on. And I want to see if they open up and bring things back to normal. If they bring things back to normal in May, then hey, maybe we just had a weird thing to go through as a world, a global society, and maybe we'll be coming out of that. But if we don't in May come back to some sense of normalcy in certain areas of our country that are not greatly impacted by all this, then I'll have more to say. But right now, I just want to keep everything close to the vest, because I don't know yet. I'm waiting for more information. Okay, so, but for gold, if we have a continuation, if we stay in lockdown the first week of May, okay, so if that happens, gold can really fly then, because people are going to go really cabin fever. It's it's going to be stir crazy city here, and people are just going to go nuts, and they're going to start doing things that are not good, and they're going to start going out into the streets doing things, breaking in stores and just taking what they want. They used to, years ago they had dash and go, which were like a bunch of kids would go into the store. They would mob the store really quick, go and steal things and run right back out. And there were so many of them, you just can't go after any one of them. It's just too many of them. I think that's what's going to end up happening next. I think we're going to see mobs of people just going into the stores, grabbing things and running. And because $1,200, let's face it, if we stay shut down, $1,200, I don't know what $1,200 does for you, but $1,200 wouldn't even pay for my utilities at my homes. We just use a lot, and it may sound hard to believe, but that's what we do here. And $1,200 just simply isn't enough. I spend more in groceries than that much in money. So I don't know what $1,200 would do for someone else, but I can assure you that if we were all in the same room, we would collectively agree that it ain't doing it. It's not doing it. You have things that you have to take care of, and you have families to take care of, and $1,200 stimulus one-time payment, it's not it. So maybe the unemployment checks are padding people out. Maybe, I don't know, but I know that I have 2 bank accounts that I can't even get into because of whatever is going on, and the banks are shut down. Like, I can't access my accounts, and I'm not expecting a stimulus check. I'm up above the pay grades that require your eligibility, so I know I'm not getting that. But my money is in 2 of these banks that are affected by whatever's going on, and no one can. I can't even sign in. Like, I can't see what my accounts are doing. Nothing. Okay, so that's alarming to me. That's worrisome for me because I've been watching the banks to see if the banks do any kind of funny business, and it's just going into the topics of what I said I was going to talk about. Should we stay in lockdown the first day of May? So I'm going to leave that for that time. Okay, so we're going to wait until the 1st of May. If Trump and the governments don't come together with some kind of a plan to put us back into sense of normalcy, at least making an effort to start to do it, even if it's a slow rollout, I think that would be good, because there is areas where we just simply don't have any of this stuff going on, and those individuals shouldn't be expected to be doing what everybody else is expected to do. I guess that's pretty much it in terms of what I'm thinking and why it should be bullish for gold. But below 1680 is problematic for the bulls. Okay, so we want to see 1680 maintain, and it could spike through it just very, I guess, in a minuscule way and still be okay. I just don't want to see it go down there and lay underneath 1680 or close below 1680, okay, on a daily basis, because if we do that, then again, that's problematic for the underlying bullish structure for gold. All right, and I think that's going to be it. I want to keep it short today. I will have a video for you tomorrow, and I'll tell you what the video is about. It's going to be added to the normal area in our weekly commentaries, but I'm also going to add it to month one's content list. In other words, like when people sign up and the first month content they see, I'm going to add it to that page. Okay, so if you ever want to see that video again and you don't want to go through the archives of the commentary looking for it, you'll be able to go right to the first month's commentary, and it'll be very accessible to you there. What the video is going to be tomorrow is, what are you supposed to be doing with the commentaries? In other words, when I give you these commentaries on Wednesday and on weekends, the things that I say for a new trader or for a new student coming in, it feels like, what am I supposed to do with this? I get it. Okay, so I'm going to show you exactly what I have in mind for each of you when you sit down and you listen to me jawbone about what I think is going to happen. I want you to do the very things that you'll see me do in tomorrow's video. Okay, so I'm going to try to be as concise as I possibly can, but I don't want it to be a 4-hour video either. Okay, so I'm going to tell you exactly what you should be doing. I'm kind of more or less pantomiming how someone that has a business, has a job, or they can't watch the real-time markets and then still use the insights that I give in the commentary. What are you supposed to be doing at that? So that way it helps you stimulate your learning. It keeps you active each day. And what it is that you're supposed to be doing with the commentary that fills in all the gaps that you get from the concepts that come to you monthly. And then by doing the thing I'm going to show you tomorrow, you'll see how all this stuff ends up, because of experience, every week, multiple times a week. You will see how the time element helps fill in those gaps that you have, that you feel these overwhelming desires to send me emails asking questions that that these questions will be answered. Okay, at least you should. Okay, and if you don't think so, I'm telling you that 99% of the things you ask me in email, all of you, they get answered in future lessons. And most of you are not patient enough to wait, and you want to kind of like jump in front of the line. Just like I said on Monday, some of you are abusing the term urgent in your email headers. And I'm expecting, and my staff is expecting, that these emails have something to do with your connection or something to that effect. And they're not. They're just questions that are really not that urgent, or they're opinions that are being shared. And I know why. You want me to talk about it. You want me to mention it. Okay. And keep that term urgent for real urgent matters. Like if you can't get into the forum, if you can't watch a video, then that's what it is. Also, while I'm saying that in closing, I have had a great deal of emails come in by way of people saying that the videos are slow, very, very slow. That's happening with everything. Okay, I have high-speed internet service here, and I have a separate not email, but the ISP service that runs just for my company, and even that's running slow. And it's because everybody's sitting home right now. Everyone's draining the bandwidth. Okay, and if everybody's sitting home and they're all watching Netflix and they're all watching whatever they're doing, it's going to create problems for streaming. Okay, and the best way to do this is to right click on the video link and then save as. Okay, download it to your hard drive. Do not store them. Do not store any of my videos on a Google Drive. Do not store them on a mega file or any cloud storage, because if you do that, it takes us a little bit of time, but we end up finding it, and then that flagging gets you banned. And I don't care the sob story you send me. Oh, I do it because of this. I don't care why you do it. I've told you not to do it. That's part of the rules here. Okay, it's very inexpensive for you to get yourself a couple flash drives. Okay, and you can store every one of my months or segments of these commentaries and lessons on a flash drive. Okay, and you can carry it wherever you go. You can plug it into your laptop when you're out on the boat, or if you're going on a train, if you're traveling, wherever. Not that that's going on much right now, but it's just, that's the way you want to do it. You want to download it and watch it remotely, so that way you're not streaming. Because I can watch the videos, and once in a while it'll buffer for a second, and then it'll start playing again. So I already know what's going on, because it happened to my wife and I. We were watching Netflix, and all of a sudden it was sputtering, and we've never had that problem before. And it's just, so many people are using the internet right now. Everyone's home. Everyone's doing the same thing. They're binge watching everything on Netflix. They're doing everything they can to watch Amazon Prime, videos and movies. All that streaming. About 60% almost of online activity is streaming. So now, if you use that figure in a normal environment. What is it now? Because everyone's home. That's what's going on. So it's not my server, it's not my service, it's not me making it hard for you to watch videos. Okay, it's just the byproduct of everyone being home. All right. The last bit of business is if you do have issues with playback, or if you're having problems with once in a while a link won't work for you, clear your browser history, clear your form data. That's something new I'm asking you all to do, because for whatever reason that seems to be working for me, because I was doing the same things I was giving other people to do in terms of if they had issues with certain links. Clear the browser history, clear your cache and your cookies, and then reboot. Also clean your form data. Okay, some of you are actually saving your password and your usernames, and for whatever reason, if you clear that, sometimes it just makes it easier to just go through and it works better. Okay. Apart from that, unless I have removed you from the service for non-payment, that's the fix. That's how it's fixed. There's nothing else that we do that rectifies that. Folks have moved from other browsers, from whatever they were using that had problems, watching the videos. Google Chrome is the best one. That's the one that has shown the least in terms of problems with playback. But I've also had people complain about using Chrome, but then they've used like Firefox, or if they used Internet Explorer. I can't stand that one, but nonetheless, it may be a browser issue. Okay, I don't know why some folks in certain areas are able to watch it better on one browser than the other. Again, that has nothing to do with us. We're not doing anything with the settings. It's just simply a MP4 file that's uploaded to a server. It's password protected. Once you access that with your username and password, it'll play. And if you download it, it'll play directly right from your terminal, your PC or your laptop. Right? I have made concession for those individuals that want to watch their videos on their phone. Some of them have had issues with their ISP, and they've moved to a cellular service. If you want to use your cell phone to watch your videos and be able to watch them from whatever cell phone data, if you're going to do that, all you have to do is send me an email saying, okay, Michael, I want to start using my cell phone to watch the videos. And as soon as you send me that email, the very next time you log in, we're going to assume that the different ISP is your phone, and then we'll keep track with that, and then you won't have any problems. There won't be any worries about you getting violated for terms of use, nothing like that. Okay, and I think that's going to be it, folks. Anything pops up tomorrow, I will obviously make a point of noting it in Twitter so that way you guys can see it. Otherwise, we're going to be watching GBP and the effects of the dollar in regards to its employment number. Until then, I wish you good luck and good trading.